But I would say this is that if you look back at that chart on the Dixie, right, the DXY, and you see this vertical move in the dollar, and to see gold holding up as well as it has during that, I mean, really look at the kind of the sideways to slightly lower chop we've seen. To me, that's a positive bias. That's a positive factor here. And again, in general, you would assume, okay, dollar up for 11 straight weeks, gold should be down 11 straight weeks, and it's not. And in fact, you've actually made a bull flag here.
Welcome back to Soar Financial, everybody. Thank you so much for joining us for a market update. And I'm joined by Gareth Soloway. He is the chief market strategist over at inthemoneystocks.com, and somebody I've been trying to get on the program for a while. I'm really excited that he could finally make some time for us. Like I'm extremely humbled that he's on, and I know he is busy because he's an active trader in the markets, and really looking forward to his analysis because it seems like it's an interesting day today in the markets. A lot of red. It seems like we broke a lot of I wouldn't say resistance levels, but like important markers, like the Dixie's up at 106, the S&P's falling by over 1%. We're below 4,300. And the 10-year broke over 4.5% yield. So really, really interesting times. Gareth, thank you so much for joining us on this day.
Oh, it's such a pleasure to be here. Thank you.
Really appreciate it. Thank you so much. Let's start with a bit of a holistic question first before we dive into some specifics. But how healthy do you think the market is right now?
Yeah, I think the market is floating on fumes, if you will. So again, it's been one of these scenarios where we've had this great rally up in the S&P and the NASDAQ. But the problem is it's been led by, we know, the Magnificent Seven. And there's no easier way to look at this as you could just flip over to the Russell, the IWM, which doesn't include the Magnificent Seven. And all it's been doing is going sideways for the last year, essentially. If you look at the NASDAQ, for instance, the QQQ, it's had this big vertical move. And now it's finally starting to break down because we've seen Apple, we've seen Microsoft, we've seen NVIDIA all start to break down. So I think that you had a big group of, well, not big, but big by market cap group stocks leading this market up. It got people excited. It got a lot of money from the sidelines into the market. And now reality is starting to hit, which is higher for longer rates. Dollar is strong, and eventually, unfortunately, a recession.
Yeah, interesting. Like I just picked up a headline as well this morning. Is the hedge funds are reducing their leverage, right?
Yep.
What does that mean? Explain that to us, and how is it reflected in the charts?
Yeah, so for hedge funds to reduce leverage, I mean, first of all, hedge funds love leverage because it means they can get more bang for the buck. But the fact that they're reducing it means they see a lot of volatility in the future, a lot of risk in the future. And I actually just read as well that they've now flipped heavily on the short side. Now, a lot of people would say that could be a contrarian indicator, but it depends on which hedge funds. There are hedge funds that are absolutely a genius in terms of trading, and then there are other ones that are kind of second tier. But either way, it's essentially telling you where they believe the market is heading, and it's starting to align with the economic outlook that I have, that it does tell us trouble is ahead.
Yeah, interesting. Like you mentioned recession, because it seems like it's a forbidden word these days. Like even Powell's economists said, well, there's no more recession and soft landing. Yeah, it'll be very soft landing as well.
And that's
right?
the kicker too. And I think one of the things, just to jump in and mention, is that in 2008, I think it was Ben Bernanke came out and said, hey, we're not seeing a recession. And then we know what happened after that. So it seems like it's almost a rite of passage that a Fed chair has to come out when everyone is speculating and say, oh, no, we're not going to have that. And then it ultimately happens.
Yeah, well, he can't really go out and say, hey, we're going to crash hard in October, right? You
Yeah,
can't really say that either.
He can't say that, but at the same time, prior to that, he was projecting, the Fed had actually projected a recession. And I thought that was really interesting, is that over the last couple of months, they took that recession off the table. And that to me is like the kiss of death. Once they do that, it's like, okay, it's definitely going to happen now.
Absolutely. You mentioned the strong dollar, and I mentioned that the hedge funds are deleveraging. So, because I was wondering, like, where's the money going? Is it really just all flowing into the U.S. dollar right now, and why?
Yeah, so I think part of that is you have a Fed that is going to remain stronger for longer, or higher for longer, and that's keeping the dollar strong. And then you also have a situation like, you look at China, right? China's a mess right now. You have Europe a mess right now. And so the more countries are seeing instability in their financial markets, the more likely money is going to run to the dollar for safety. And it's so interesting too, because, if you go back 6-12 months, it was all about de-dollarization, right? I mean, that was the big term that everyone was using, and it was all the dollar again is done done with. It's going to be, and before you know it, the dollar's gone on one of its best streaks on the weekly. Look at the weekly chart. We're now at 11 straight up weeks in a row in the dollar. And again, it just shows you that the dollar is still king dollar. Now, eventually, I do think it slowly dissipates, but it doesn't happen overnight. Reserve currencies don't instantly become not reserve currencies. It takes literally decades to happen.
Absolutely. Yeah, it does not happen. Even if a gold-backed currency were to pop up tomorrow,
Yeah.
reserve status is like it's the whole banking system itself. Like I had guests on, I think Michael Howell explained liquidity to us as well. Like how and where does the money flow, right? So
Yep.
looking at that is really really interesting. Gold seems to be, or sorry, not gold, but the U.S. dollar seems to be that safe haven trade right now, right? Because I'm looking at it again, talking with a pro trader here. It's quite topical. Like gold is down actually today. It's not being seen as a safe haven investment versus the U.S. dollar apparently. Why is that? What's your guess here?
Yeah, I think it's just the strong dollar is just taking a little bit of a bite out of gold. But I would say this is that if you look back at that chart on the Dixie, right, the DXY, and you see this vertical move in the dollar, and to see gold holding up as well as it has during that, I mean, really look at the kind of the sideways to slightly lower chop we've seen. To me, that's a positive bias. That's a positive factor here. And again, in general, you would assume, okay, dollar up for 11 straight weeks. Gold should be down 11 straight weeks, and it's not. And in fact, you've actually made a bull flag here. So I think that, again, what I've heard is that these central banks all around the world are loading up on gold. They're buying it. To me, that's just one more kind of intuitive reason for me to buy gold for the longer term here. And again, longer term for me is a year, couple years, 5 years, whatever it may be. But the thought process is these are the guys that control the printing presses. If they're buying gold, it's telling you that they know what they're going to have to do eventually, which will ultimately devalue these currencies, and gold will be kind of a store of safety.
Just to follow up on that, and I don't want to get political or anything, but it's mostly the Eastern nations, China, Russia, India, who are buying gold. It's not the U.S. or the Western nations like Germany, for example, right? I
Right.
think the only Western nations are Ireland and Poland that have added a little bit to their gold reserve.
Right.
Do you have a theory on that? Just curious.
The only thing I could think of is that a lot of the Asian nations, the Eastern nations, own a lot of U.S. treasuries. So we know Japan is just a massive buyer. We know China has been holding on to U.S. treasuries, although I think they've started to reduce. But I think it could be a way to hedge what they see, which is what we all see, is that eventually the Fed has to go back to printing money, and eventually the devaluing of the U.S. dollar will occur. And so I could see it also being something of a hedge for them. They're buying this knowing what the downfall of the dollar will eventually be over the longer term.
Absolutely. Yeah, no, Gareth, since I have you as a technical analyst here, I think we do have to look at some of the technical trade levels as well, like the S&P 500. It broke down below 4,300, for example. So I'm curious, like, where are we headed? Like, what is momentum looking like right now?
Yeah, so momentum has definitely switched now. And what we could see here is there was this wedge pattern on my chart. And again, this low trend line here has now broken to the downside. And again, what you could make a case since October, and again, we're looking at the weekly chart here, since October of 2022, it's been higher lows, right? It's constantly higher lows until right here. Here was a low, and we've now made a lower low on the chart. So again, that's a change in direction, a change of trend now starting. We also have a high here and a lower high as well. So we're now making lower highs and lower lows, which tells me, again, this market is probably heading lower overall. Doesn't mean we're not going to bounce. As a trader, I'm always looking for potential bounces in the market, but I do think we are headed lower. If we go to the SPY, just because I have a few other things on this chart, if we flip to the daily chart, you even have a head and shoulders here, shoulder here, head and shoulder, and we've broken there. I short term have a downside target on the spiders around 420, which is around just below 4,200 on the spiders or on the S&P. But ultimately, this uptrend that we've been in since October of 2022, if this blue line breaks and we start trading below it, this market really starts flashing some red sell signal signs very, very heavily.
Yeah. It seems like it is building up that momentum. Just all the indicators are leading that way, right?
Yep.
Just looking at Fed data as well, like I don't think they're going to hike rates again here anytime soon. Just with trying to take that pressure off the markets as well, because once we break that blue line, as you say, I think pressure will build up on Powell to do something, maybe even cut.
Yeah. Yeah. And again, it's going to be tricky, right? Because it's going to be based on inflation. Like, where is inflation? How quickly will inflation come down so that he can actually cut aggressively? I mean, it's one thing to just lower and throw the markets a bone, but to do stuff that will have an impact on the economy, how much will he have to cut to do that? And again, is inflation low enough at that point to allow him to do that aggressively? Because the problem is, right, is that, he raised rates to where they are, and we started with inflation that was 1%, 2%, and then we went up to 9. If you start printing and you're at 3 or 4%, do you go up to 12 to 15% inflation? And so he has to be really, really careful here. And I think that's one of the issues for the market. Is the market right now doesn't believe that he won't come to the rescue very quickly. But I do worry that if inflation stays high, he's going to be somewhat handcuffed.
Absolutely. Like, especially there's a price driver that he really can't control, because it's the OPEC that actually controls it, or OPEC plus, and that's the oil price.
That's
I
right.
just wrote down, like, Brent is at 94, crude is at $90.50 a barrel. So we're getting back to that $100 level, and that's something the Fed can't control with higher interest rates,
That's
right?
right. That's right. And to be honest, it'll be interesting to see. But if the bias for the U.S. economy starts to shift from soft landing or no landing to a recession, does oil come in at that point? And I actually have some interesting levels on oil here. I do believe short term we've topped on oil around this $93 level, and now it's just a matter of, does that resistance hold? So again, for me, it's kind of looking and saying, okay, what's the general bias? And right now, when I look out there, everyone's calling for $120 oil. For me, I usually take the opposite side, especially when I have technicals here. And we actually could be making a little bit of a bearish pattern here that could send us back actually to about $85 a barrel. So again, for me, it's also looking at certain stocks. Like, let me show you this one. MPC is at the high end of this channel, right? So every time it gets up here, and you can even extend it out a little bit, pivot high, big pullback, pivot high right into that blue trend line, and look at what it's right up against again, which implies for me, we might see a pullback in some oil stocks. So sometimes it's going against the grain where everyone else is bullish, and you actually have to look at the charts and see what they're saying.
Yeah, do you see liquidity indicators? Like, I know you mentioned RSI, or you mentioned RSI indicators quite a bit in your videos as well. Do you see a change in volume and liquidity in those like stocks and in the markets itself?
Yeah, it does. It does seem like there's some distribution going on in some of the oil stocks, although not tremendous yet. So it seems like maybe just a few of the bigger funds are slowly taking some profits. But certainly, I think the bigger question too is about seeing where the markets are and people understanding the liquidities being sucked out by the Federal Reserve and the impact, right? I mean, during COVID, we saw massive amounts of liquidity pumped into the markets. What happened to crypto prices? They went to crazy levels. Stock market, crazy levels. Valuations, crazy levels. And even AI right now, stocks, they've come back in, but they had these crazy runs. And remember what higher interest rates do, right? It gives people an alternative to say, okay, instead of being in the markets, I'm going to put it in and get 5% guaranteed on a bond. And so there's going to be a certain amount of money that gets sucked out of equity prices or out of equities overall. And that is a trigger for lower equity prices, right? There's less money to push these things up.
Absolutely. Yeah. No, less money, I think, it drained the liquidity, especially from the generalist investors as well. Gary, we didn't really get to do an introduction earlier on, but like, are you a long short trader or just long trader, short trader? Do you go both ways?
Both ways, long and short. It's absolutely amazing. I love the idea of being able to, go with a trade that's going to go up and then be able to flip it right around and go short. And again, I'm kind of agnostic in that. I don't care what the stock is. I don't care what the asset is, frankly. It's all about the charts. And if it tells me to go long, I go long. If it tells me to go short, I go short.
Fantastic. Now, because I was going to follow up a little bit with a question, Jim Cramer quote, like, there's always a bull market somewhere, right? And a lot of our viewers, obviously, and myself, I'm not a short trader as well. They're usually long and strong, right? And or
Yep.
we're just bag holders, right? But like, are there some markets that you're looking at? It's like, okay, I'd go long here right now. Like, it could be a commodity, it
Yeah.
could be a general market, like the Russell Index. I don't know, throwing names out there, but
Yeah, I mean, there absolutely is, and I agree with that. There's always a bull market somewhere, and so there's always some place to look. It takes a little bit of work, but for instance, I continue to be a big fan of this chart here. This is the EWZ, which is the Brazilian stock market. Now, what I like about the Brazilian stock market, being someone who's relatively bullish on commodities over the longer term, and more so metals, but if you look at this, right, the Brazilian market hit a high in '08. it has never come back to even close to those highs since '08, right? And so what I see here is a trend line. And look at what's happening here. We're starting to kind of get through this trend line down here. And again, think about this, right? You could be in the US markets where if I go to the US markets, let's go to the SPX. This is the run since '08. Let's go back to '08. So this is where we were in '08 down here. And we were at 700 on the S&P. We got as high as almost 5,000. Or you could say, well, what about an emerging market that was at 100 in '08 and is now at $30? I mean, look at the difference between those two markets. And ultimately, I'm always someone who likes buying things on a discount, right? I don't want to chase when things are at their highs. I'd rather find the next big thing and get in early. And to me, this looks interesting. I mean, again, there's no guarantees. We know that. There's no guarantees in trading or investing. But for me, it makes sense that Brazil might be a market that outperforms over the next year or two.
Interesting. You're not the first guest to mention Brazil, Gareth. So I'm curious, like, if you've seen volume or liquidity pick up in those markets as well, with international investors sort of jumping in, Brazil making a stand, like being between the BRICS and the Western nations as well, being sort of the Switzerland to a degree in some of those discussions, right?
Yeah, absolutely. And to be honest, it almost makes sense that, like, if you think about it, ever since the Fed started printing in '08, the US has been the place to invest because the Fed was always just liquidity, liquidity, print, 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 lower. How many quantitative easing structures did we do? Now we know that the Fed probably won't be as lenient as maybe some of these other countries that have backings of metals and other things as well. And so it does make sense that money will start to say, okay, the US is somewhat spent in the near term. Let me go out somewhere else. Where is the next place to go? I just want to find that soon enough, right? And again, just to throw out one more idea here, I kind of like the K-Web, which is a higher risk because it's China, right? So anything with China is going to be higher risk. But you have this beautiful basing structure going on the charts where essentially we have a move here. You had a beautiful bottom, like a V bottom, and then you're making a bullish pattern. And same kind of thing. I mean, you go back to even 2021 and look at where this market was. You go back to even further. I mean, I could go to the Hang Seng market, which is essentially that same market, the Chinese market, and you go back to '08. And you basically haven't broken those highs as well. So now remember, China has some other things going on there where the US and China are butting heads, and you don't know about Taiwan. So there's additional risks there. But again, to me, these are the places probably where I want to start showing a little bit of love to in terms of investing.
Interesting. Yeah, just for some reason, I had the 10-year bond yields up for Brazil, and they're at 12%. Is that a market you're looking at all? I just saw the 12%. I was like, interesting.
Yeah, so that would be. I haven't looked at the bonds, to be honest, of Brazil, but that certainly is attractive. There's no doubt about it.
Yeah, I was just looking at your thesis, right? So if Brazil is becoming more of an economic superpower, for lack of a better term, right? Why not take the 12%? Because it can only go up from here, right? Or down.
Well, you hope so. So you hope so.
That's the thesis, right? Talk about bond yields. Let's quickly look at the 10-year U.S. Treasury yield as well, or bond yield. 4.55% I saw earlier, which seems remarkable. And a lot of analysts forecast 4.6 and maybe as a high. So I'm curious what your thesis on the 10-year is, Gareth.
Yeah, so the first thing to recognize is that this has been the quickest the Fed has ever raised rates in history, right? I mean, we've had higher interest rates, obviously, historically than this level, but we've never had such an aggressive raising. And this is kind of what always bugs me about, like, people that say, oh, it's going to be a soft landing or it's going to be no landing at all. It's like let's put this in perspective. The fastest they've ever raised rates, yet you don't think that they'll somehow break something, when every time in the past they've always broke something when they've raised at a slower pace. So to me, it's a little bit of that hopium type thing, like, oh, let's just hope it works out. Let's hope the Fed for once gets it right. Historically, that hasn't been the case. Now, having said that, if you look at this trend line here, let's go to our weekly chart. This is a beautiful trend line going back to 2012. And to me, look at this, how every little pivot top here, it runs into this and pulls back. And look at where we're getting really close to. So I have a target of 4.6% on the 10-year here. And I actually think that might be a short-term top. Hard to know if it'll be a top in the next 12, 18 months. But to be honest, I'm starting to look to take trades based on maybe a top, like for instance, a TLT, which is an ETF that kind of is inverse to yields. That is someplace that I'm starting to nibble just a little bit with yields up here.
Hypothetically, if we break through that trend line, what happens?
Oh man. So if we break through that trend line, we got to go to back to the drawing board, right? And say, okay, my next level here. And again, just looking at this chart, there's some major pivot highs right here. See, if you look at right through here, there's a bunch of little pivot points. And I would say that's your next spot. So I mean, you'd start looking at a 5.3, 5.25 10-year, which again, this is what's crazy is like we know what happened. Remember when yields got like up to 4% or so, and we saw Silicon Valley Bank fail and all these other failures. Now you're making new highs. And it's silly to think that some of these banks aren't in major trouble. The question is, will we hear about it, or has the Fed kind of gone in and kind of silently done what they have to do? And again, there's no way that there's not major breakages in the system with rates where they are.
Absolutely. Or just, well, the Fed came in at the time where Janet Yellen said, "Well, here's all the money you need.
Right.
Let's quench this fire real quick." But I'm sure sparks have flown further away, so I'm sure there'll
Yeah.
be a fire somewhere else. Gareth, we got to talk commodities as well. We touched on gold. If you could bring up that gold chart again, and let's look at some support levels and some technical levels here as well. Like momentum doesn't look too rosy right now, especially if I look at my mining stock portfolio.
Yeah, yeah. I mean, today's a pretty big down day in gold, no doubt about it. But we're still inside of this little channel here, or this little wedge pattern. So this would be known as a bullish wedge pattern. You would like to see it not get below the yellow line down here. That would be an area that you wouldn't want to violate. We can see that every time it's gotten down there, it's bounced up and then bounced down and bounced up. So eventually with this pullback, you want to see this turn back around and go up. But I would say this is like, you think back to the dollar, 11 straight up weeks in a row. If you look historically at any chart, how many times do charts get 11 weeks up in a row? And then how many times afterwards do they actually have a pullback? And if the dollar is about to pull back, which I'm in the camp that it's getting very close to that, then I would think that gold, based on the performance of sideways to down chop versus very dramatic, sharp move up on the dollar, you could be looking at a big breakout on gold coming. It doesn't look pretty today, but as far as I'm concerned, the chart says as long as we don't take out 1870, then gold is fine in this range.
Yeah. I do have to ask you about silver. Do you see a similar chart pattern there as well?
Silver's a little trickier, right? So we do have this kind of wedge pattern here. It has to hold on to this white trend line here. Otherwise, it's vulnerable down to about 20 and a half. And the only tricky thing with silver is that it's like it's not as pure a store of safety as gold. So you have that industrial side as well, which makes it just a little trickier to kind of factor in. It's not just one thing, which is the safety trade of gold. It's more of the safety trade plus industrial metal. So again, I'm not quite as secure on that. I think eventually, longer term, it's breaking out. That's of little concern to me. I think it will break out. It's just in the near term here, there is a chance that it could go down to about 20.5.
Yeah, because it's already trading at the bottom of that range. Interesting.
Yep.
Appreciate you clarifying that. One commodity, one resource that gives investors hopium, I love that word, by the way, is uranium. Right, it seems to be in a bullish uptrend right now. A lot of Twitter and X is full of posts about uranium. Uranium bulls are at full swing here. What would the charts tell you? Looks like we broke through out a bullish
Yep.
pattern there.
Yeah. Yeah. So this was a beautiful wedge pattern breakout. And again, look at the move it's had. But remember, as an investor, you don't want to chase moves. So the fact that this thing has gone up from the breakout of 21 to a high of 28 yesterday, you wouldn't be a buyer here. Instead, what you do is you say, okay, I missed that trade. Now let's watch for a pullback. Most investors get so energetic and emotional. They don't want to wait for the pullback because they're worried they're going to miss the next move. I'm in the mindset of saying, listen, there's always another trade around the corner. I want a price that I want, not where I'm chasing. So you can see it's pulling back today, which makes sense, right? We came kind of right up into this area here, this little pivot area. It's extended. Let it pull back. For me, my level is very clear of where I want to buy this, and it's right in here, right? There's kind of a pivot point around 24 on the URA, the uranium ETF here. And that would be a retrace where I would be a buyer. And just remember, it's about not chasing. These things have gotten very extended. The fact that we're hearing everyone talk about uranium probably tells us there is a pullback coming, because we know when the masses talk about something, it's usually the end of a move versus the beginning. But I will say this, on pullbacks, I think you buy uranium here. If it comes back to this level, I'll probably even buy it, as the bigger thesis. And I think I've said this before, is that alternate energy can't solve the climate issue at this stage. We don't have enough of it. We can't produce enough of it. Uranium and nuclear power is probably somewhere we're going to have to get real with ourselves and probably go to. So longer term, I think uranium is very key.
Yeah, it's based on all the tweets I'm seeing, there's a lot of momentum in the uranium trade right now. So
Yeah.
Let some air out of that balloon for a minute, and then
Yeah.
we'll regroup. Gareth, last topic quickly I want to talk about is the mining stocks themselves. You mentioned something really interesting before we hit record, is that you actually bought into the space, right? The
Yep.
question is now why, of course, because again, hopium, right? Usually some of the stocks usually lead the metals and the bigger rally, and we could use a trend change. What do you see?
Yeah, so on the chart here, the GDX at least, and this is the GDX, and I just picked up a little bit of it because number one, we pulled back pretty quickly from $30 down to about 27.90 where we currently are. There's an upsloping trend line from this low in orange. There's a longer term trend line going back to 2020 low, the COVID lows that's coming up here as well. So there's a bunch of different areas now in this lower range where I actually think it becomes an accumulation zone. And again, being that the gold trade and eventually silver to me looks very, very bullish longer term, I think it makes a lot of sense to be starting to inch into these miners here. Miners have not participated much because their costs have gone up so dramatically. So, for instance, the price of gold hasn't increased dramatically to offset inflation. So miners suffered because their costs went up, but they weren't making a lot on the extra gold. You now flip that around. If we get a breakout on gold, and I think the all-time highs will be taken out, these miners will play catch up very, very quickly and have some serious upside.
Absolutely. That's definitely, balm on my heart, or would you balm on my soul? It's like,
Yeah.
especially since you jumped in there now, just speculating on that trend change as well. Really, really interesting. Gareth, fantastic conversation. Thank you so much for coming on. I meant to ask you one last question, but it escaped me. It was a good follow up. To the Newmont discussion. I wanted to talk Newmont for a second because it's a
Sure.
name you brought up, but I forgot the question. Like, one of the things is, of course, you mentioned cost going up, is the all-in sustaining cost. Newmont is sitting around 1,400, while gold is now 1,900. Margin's actually smaller than it was when gold was at 1,300, which
Yep.
is mind blowing.
Yes, that is. And I think, again, that's why these, like, if you look at the Newmont mining chart, right? I mean, it's very clear that this is way down from levels that you go back to, like you said, 2013, and it was down in this range. So to me, that's going to change, and that'll change when you get a breakout on gold. And I just love this support down here, $38, $37, just so much support. There's a very clear trend line connecting the highs from 2023 straight down. When we break above that, which is around 41 or so, then I think this thing gets a charge to it. So, again, my thesis for how I trade is to look for unloved, good quality plays. When everyone else hates them, I want to accumulate them. And right now, the miners are in that group, and that's the time to accumulate, especially with my view on gold.
Fantastic. I remember the question I wanted to ask you is, like, do you solely look at the price action, or do you really look at the volume liquidity as well? Because we only talk
More,
price here.
yeah, more so. There's occasionally I'll look at volume, like on bottoming and topping tails, technical reversal, candles. But for the most part, it's all about the chart itself, drawing trend lines, looking at the trend, the bigger pattern formations, all that kind of stuff. It gives me so much information.
That's the question I want to ask. So just to, because you are jumping back in here, so I was wondering if there's a bottom, like in volume in the GDX. It feels like there's only sellers, no buyers out there right now. It's just
Yeah.
absolutely abysmal out there right now. So fantastic. Gareth, let's wrap it up here. We need to get you back later this year, hopefully, like before year end, maybe do a bit of a
Yeah.
recap, and then of course have to look, give an outlook for 2024. But I tremendously enjoyed the conversation. Where can we find more of you? How can we follow you?
Oh, that's wonderful. Thank you so much for having me. And really just follow me on Twitter, on YouTube. Again, I do a game plan daily that's free on YouTube. It's all hardcore chart analysis on commodities, stocks, and crypto. And then in the money stocks, like you mentioned earlier on, I have a stock service there where I give out trade signals, buy entries and exits. And then actually check out verifiedinvesting.com as well, where I have an educational product, 20 hours of content. Everything I know up here is in that from 24 years of trading. So again, thank you for having me, man. It's been a pleasure. Great
Absolutely,
conversation.
absolutely. No, your daily videos give me definitely screen size envy. So
Nice. Thanks.
fantastic, Gareth. Thank you so much, and to everybody else, thank you so much for tuning in. We hope you enjoyed this discussion. A bit different, not just a macro discussion, but we looked at some of the charts in more detail. We hope this was helpful. I hope this helped you orient a little bit in the market where we headed. It seems like there's a bit of a momentum change happening over the last couple of days. So, of course, take this with a grain of salt. This is not financial advice. advice, read the disclaimer, yada yada yada. You know the spiel. But really appreciate you tuning in, and also hit that subscribe button. I know 80 to 85% of you watching are not subscribed. Let's please change that. I'd love to have Gareth back more regularly as well. Bring other guests of great caliber on, of course, too. So that helps us. Engage with us. What do you think is happening? And we'll be back with lots more content. Thank you so much for tuning in.